We've got with us on the show Louis Kaush, who is a director at the Fung Institute. He joins us on the show from Hong Kong. Now, Louis, to begin with, what's your view on the China growth story? What's the outlook over there? Inflation and monetary policy as well. What's the take going forward?
I think China's economy has been slowing. It has been doing so already since something like the fall of last year. I still do not see this cooling, moving into dangerous territory, in the sense that we are still seeing growth both in the manufacturing sector but also in the economy overall. In fact, people have recently revised upwards their GDP forecast for this year, basically because the external picture is not as bad as we had expected, as we had feared 3-4 months ago. So the surprising thing is that despite all the talk of slowdown and some people talking about hard landing risks, actually what we are doing now at the moment is revising upwards our projections for growth in China, as that external picture has not been as bad as people had feared, but also as the domestic economy is holding up. And we are seeing in China policymakers, the monetary policymakers, but more generally the people looking at the macro stance, they have also been positively surprised by how well the economy is actually holding up, and that has meant that we have not seen a tremendous amount of easing. We have seen some easing, but we haven't seen a lot of easing, and what we will see in the coming months is that the policymakers will look very carefully at the data and have some room for further easing if that is warranted by the data, by the activity data.
Hi Louis, afternoon. Now, the high oil prices also seem to be a big concern for Asian economies. How are you viewing crude oil prices for FY13? Because unresolved geopolitical concerns still support oil prices.
On the markets for raw materials globally, we've seen this interesting picture that the oil price has gone up because of those geopolitical concerns, because of supply side reasons. Industrial commodities generally, like basically the metals and minerals, have not gone up. They are still down on a year ago, and so this is, in my personal opinion, a confirmation that indeed the oil price has gone up in no small part because of supply reasons. It's not just strong demand that is driving up oil prices, and so that is by itself not a good thing. If the oil price goes up for supply reasons, that means that it can choke off some of the growth. And so what we are seeing in Asia is that growth momentum is still quite decent, and so I'm not too worried about how much it is taking off on growth. What we do see, though, that in countries like India, the increase in oil prices is hiking up further the import bill, and so this is putting pressure on the current account and also on the fiscal accounts, actually, because India is subsidizing its fuel consumption, and so there are significant problems caused in Asia by the higher oil prices.
Louis, what's your view on Asian currencies, especially in the context of India? And again, within Asia, which currency do you believe will perform better?
I think in India itself, the rupee is going to face some more challenging times. The rupee has, of course, strengthened so far this year after its large fall last year. What we are facing at the moment in India is a complicated macro situation with growth not yet having resumed a lot, inflation not yet being fully under control, and on the external side, the current account deficit quite significant, quite large. And so all in all, this means that there's not a huge amount of room for the RBI to ease very quickly in order to boost growth. There's also not a lot of prospects for very strong inflows of foreign capital in India, and so that means that the rupee is likely to remain in a risky position, is likely to remain under some negative pressure in the coming months. Moving further to other parts of Asia, I think looking at the global picture is one with the US economy holding up reasonably well. There are people worried about, or people expecting, that QE3 may emerge. I personally am not sure about that because the real economy in the US is holding up quite well, and I think that is diminishing the prospects for QE3. Having said that, Europe will remain a weak spot in the global economy, both with regard to the real economic growth that there is in Europe, but also coming from the still not completely resolved financial situation. So Europe will continue to remain a risky spot in the global economy. All in all, this remains this keeps the global picture that Asian firms and that Asian traders are facing. It keeps that global picture risky, complicated, and I think the real economic situation in Asia itself is manageable. Most economies are holding up nicely, but given that continued complicated and risky global picture, it's not clear how much we will likely to see in terms of flows into Asia and in terms of currency strengthening.
Finally, Louis, how likely will India achieve its 7.6% GDP growth set for FY13 and meet the fiscal deficit target of 5.1% of GDP?
I think that when you look at the current growth target of India's government, that one was actually set quite a while ago when prospects for this fiscal year looked a little better. Prospects have weakened on the growth front, and that means that we're likely to see growth more in the region of 6.7% or so. In line with that, or as a result of that, we're also likely to see some slippage in the budget because revenue is likely to come out weaker with that weaker growth. Also, the subsidy bills are unlikely to be as low as are projected in the budget. The subsidy bills are likely to be higher because of higher oil prices. And so combined, I think that it's likely that we will see some slippage on the fiscal front in India. Maybe not a huge amount, but some slippage.